On April 9, 2025, Nvidia, the renowned chipmaker, experienced a surge in its stock price, marking a remarkable turn of events. The company's shares soared by nearly 19%, leaving investors and analysts abuzz with excitement. This sudden surge came as a welcome relief after a period of uncertainty and volatility in the tech industry. The catalyst? News broke that the White House was reconsidering its stance on restricting the sale of Nvidia's highly sought-after H20 chips to China. This news reverberated throughout the market, signaling a potential shift in the US-China tech rivalry. Investors, always quick to react to such geopolitical developments, piled into Nvidia's stock, propelling it to new heights. The significance of this event cannot be overstated, as it underscores the intricate relationship between technology, geopolitics, and the global economy. The surge in Nvidia's stock price reflects the company's pivotal role in the burgeoning field of artificial intelligence. Nvidia's graphics processing units, particularly the H20 chip, are highly sought after by companies and research institutions worldwide for their ability to power AI applications. From self-driving cars to drug discovery, AI is rapidly transforming industries, and Nvidia's chips are at the forefront of this revolution. China, with its vast technological ambitions and burgeoning AI industry, represents a lucrative market for Nvidia. The country is home to tech giants like Alibaba, Tencent, and ByteDance, all of which rely heavily on Nvidia's chips to power their AI initiatives. In recent years, China has emerged as a global leader in AI research and development, investing heavily in this transformative technology. As a result, the demand for Nvidia's high-performance GPUs has skyrocketed in China, making it a crucial market for the company's continued growth and success. Prior to the trade tensions and export restrictions, China accounted for a significant portion of Nvidia's data center sales, estimated to be around 20%. However, the US government's concerns over China's technological advancements, particularly in the field of AI, led to the imposition of export controls on certain sensitive technologies, including Nvidia's H20 chips. These restrictions threatened to curtail Nvidia's access to the Chinese market, potentially jeopardizing a significant revenue stream. The potential loss of the Chinese market sent shockwaves through Nvidia and the broader tech industry. China's importance as a growth market for semiconductors and other advanced technologies cannot be overstated. The country's sheer size and rapid technological advancements make it an indispensable player in the global tech ecosystem. For Nvidia, maintaining a strong presence in China is crucial for its long-term success. The White House's initial decision to restrict the sale of H20 chips to China sent shockwaves through the tech industry. These chips, specifically designed for high-performance computing and AI applications, are in high demand by Chinese tech companies and research institutions. Restricting their sale would have dealt a significant blow to Nvidia's revenue and could have hampered China's progress in AI development. The potential impact of these restrictions was not lost on Nvidia's CEO, Jensen Huang. Recognizing the severity of the situation, Huang sprang into action, engaging in a strategic lobbying effort to persuade the White House to reconsider its stance. Huang, a prominent figure in the tech industry, understood the delicate balance between national security concerns and the importance of free trade. The White House's decision to reconsider its stance on H20 chip sales to China came after months of uncertainty and intense lobbying efforts by Nvidia and other industry stakeholders. The move signaled a potential easing of trade tensions between the US and China, at least in the tech sector. For Nvidia, it meant the possibility of retaining access to a crucial market and mitigating a significant financial risk. Section 4. Jensen Huang's strategic lobbying. Recognizing the potential damage to Nvidia's business, CEO Jensen Huang took a proactive approach. He engaged in a strategic lobbying effort, leveraging his industry influence and connections to advocate for a more favorable outcome. Huang's efforts highlight the increasing importance of government relations in the tech industry, particularly as geopolitical tensions and technological competition escalate. Huang's lobbying efforts were multifaceted. He met with government officials, including those at the White House, to present Nvidia's case. He argued that restricting H20 chip sales to China would not only harm Nvidia's business, but also hinder US technological leadership. He emphasized that China would likely develop its own AI chips if it was cut off from US suppliers, potentially eroding America's technological edge. Furthermore, Huang cleverly coupled his lobbying efforts with strategic investments in the United States. He announced plans to build new data centers in the US, creating jobs and demonstrating Nvidia's commitment to the American economy. This strategic move aimed to appease concerns about job losses and economic competitiveness, strengthening Nvidia's position in the eyes of policymakers. Section 5. Nvidia's rollercoaster stock performance. Nvidia's stock has been on a wild ride in recent years, reflecting the company's rapid growth and the volatility of the tech industry. After experiencing a remarkable 171% surge in 2024, driven by the booming demand for AI chips, the stock continued its upward trajectory in 2025, reaching a staggering 684% gain since 2022. This meteoric rise made Nvidia a darling of Wall Street, attracting investors eager to capitalize on the AI revolution. However, the tech industry is known for its boom and bust cycles, and Nvidia's stock was not immune to this phenomenon. In 2025, amidst concerns about slowing AI spending and increasing competition, Nvidia's stock experienced a significant downturn, plummeting by nearly 15%. This sharp decline highlighted the inherent risks associated with investing in high-growth, high-valuation tech companies. The volatility of Nvidia's stock reflects the broader uncertainty surrounding the tech industry and the global economy. Factors such as interest rate hikes, inflation, and geopolitical tensions can significantly impact investor sentiment, leading to wild swings in stock prices. Despite these fluctuations, Nvidia's long-term growth prospects remain strong, fueled by the increasing demand for AI solutions across various industries.